To get started in the stock market, you just need one thing, a demat account. To get a demat account, you just need three things, a PAN card, an Aadhaar card and a bank account of any bank, nationalized, private, cooperative bank, any bank. You just need these three things and you get your demat account. Once you get your demat account, you and this man are one and the same. I'm sure you know who he is. In case you do, well and good. In case you don't, well, let me tell you, he is Rakesh Jhunjhunwala. So congratulations, now you have the demat account. So does that mean you can just get started with investing? Well, let us understand it like this. You want to commute within the city, you want to move around from point A to point B, from one destination to another. What do? You buy a car. You buy a car, so does that mean you can just start off with driving? Not really. You need three things for that. Firstly, you have to learn driving. Secondly, you have to learn the traffic rules, the road rules. And third, you have to develop a sense of the road sensitivity, the logic, the moving of the vehicles, the moving of the people. And if you don't do that, you're going to have accidents left, right and center. So once you learn these three things, you're good to go. You can drive the car. Otherwise, you're going to have too many accidents, you're going to hit too many people, and possibly you may even land up in the jail. Much the same, after you have a demat account, before you start investing into the stock market, there are the 5 basic things you have to learn before you really start investing, before you dive into the stock market. So let us see what are these 5 critical things, the basics of the stock market. Firstly, what is your goal of investing in the stock market? What is your target? What is your goal? Second, what is your time frame to invest in the stock market? Whether you're here for short term, long term. Thirdly, to understand the different ways of investing in the stock market, what is intraday, what is delivery, etc. And then to understand the different terminologies, IPOs, mutual funds, F&Os, etc. And then the different terms like what is NSE, what is BSE, what is Sensex, what is Nifty. I'm sure you would have heard of all those things, but to understand it fundamentally. And lastly, number 5 is to understand the parameters to pick up the stocks. What are the parameters based on which you have to learn to pick up the stocks? So the first thing is to understand the goal to start investing in the stock market. What can be the probable goals? To become a crorepati. Second, to start saving for the future. Third, to build a fund to buy an asset like a house, a building, and a car, etc. Fourth, to gain financial literacy. And fifth, that everyone in the family and friends have started and I'm the only one left out, so I want to start it now. You can have any one of these goals or a bit of everything or a completely different goal, no problem. But what you need is to have a complete clarity of the goal as to why you want to start investing in the stock market, because every goal has a different unique strategy and you will have to build upon the strategy dynamically, follow it and keep on improvising it in order to reach your goal and ultimately achieve your goal. Second point is the time frame. You want to start investing short term or long term. Investment can never be short term. If you want to do it for short term, just forget it. You're going to lose money, you're going to incur huge losses. You have to be prepared that stock market is a long-term proposition, it's a long-term game. So be prepared for it, and of course it is very systematic, it's a science and a lot of study goes into it. You have to be prepared to start a lot of studying, newspapers, financial bulletins, blogs, financial blogs, hearing financial news and keeping a tab on the companies, on the NSE and BSE listed companies, understanding the sectors which are in the news and understanding the trends, not to track the tips but start tracking the trends. For example, during the festival season, the sugar stocks go up because the sweet consumption increases, and likewise the trend about the oil stocks. Now the electric vehicles are in trend. So many of the automobile companies are developing their facilities around the electric vehicles, whether it is 2-wheelers or 4-wheelers. It may look a little difficult and a little cumbersome, a little tiresome, a little tedious, but once you start understanding, you automatically start keeping a track of it every day morning, whether it is through the news channels, whether it is through the financial newspapers, or start reading the financial blogs. And you can also download some good financial apps which gives you the updates on a day-to-day basis. Now, the next point is to understand the different ways of investing, to start investing in the stock market. It can be intraday, it can be delivery. Intraday is something wherein you need to square off the transaction the same day. Either you buy a stock and then you sell it the same day before 3:30, or you sell a stock and then before 3:30 either you sell it or it gets sold automatically. That is called intraday. The next thing is delivery, wherein you take the physical stock, you purchase the physical stock as in the dematerialized form. Nowadays there are no stock certificates that are issued, everything is in a demat format, but you take the delivery of that stock. So it is in the sense the physically you are holding the stock. You are holding the stock until you decide to sell it at any future date. So these are the two methods, and then there are various sub markets within the main market, like equity markets, IPOs, F&Os, the future and options market, mutual funds, derivatives, commodities, and so many more. So you will have to understand each of these terminologies as well. Then the other thing to know, what is NSE, what is BSE? These are the two indices of the two stock markets, that is NSE is for the National Stock Exchange and BSE is for the Bombay Stock Exchange. BSE and NSE, Nifty and Sensex. These are the two indices of NSE and BSE. So these will be all the terminologies that you will have to understand and get a hang of it. Now coming to the fifth point, which is to learn the parameters to pick up the stocks. There are certain parameters based on which one can learn to pick up the stocks. Now either you can do it on your own, or you can rely on an expert advice. So what are the parameters based on which you can start picking up the stocks? Well, I'll be telling you three basic parameters. There are many more. I'll just be telling you three basic parameters. Firstly is to start studying the balance sheet of a company, the assets and liabilities, understanding the assets and liabilities, assets versus liabilities of a company. Secondly, to study, to do a ratio analysis. To do a ratio analysis, two main ratios that I would be telling you to do. First is a PE ratio and second is a debt equity ratio. Price earnings ratio and a debt equity ratio. And third one is understanding the management of a company. If the board of the company comprises of very sound management, then that gives a trust and that much of a comfort to the investors. Understanding the management of a company gives an assurance about the day-to-day running of the company and the future profit making of the company. So friends, this was my analysis of the basics of the stock market, and I have tried to list out very fundamental 5 basics so that one can get started. Any more questions or queries, feel free to drop a comment below and I'll try to reply to all the comments. So friends, if you're new to my channel, please hit the subscribe button and like and share my video so that you don't miss an update from me and I don't miss to see you the next time around. Say, every penny saved is every penny earned. Little drops of water make the mighty ocean. Little grains of sand make the mighty land, and every rupee saved and invested in the stock market can become a big fund for tomorrow. Wishing you all a great success, and thank you and Jai Hind.